just going to play that through to the short side just to see what we can get, if things do start moving. Let's have a look. So 0.35 in play. You can see what's happening on your daily scale as you're getting loads of MA catch up. In other words, your local moving averages are being very supportive of price, which of course is, going to subdue any short move, most likely. That 0.35 I put in is about 500 pips out of the money. So I'm going to have a look where I would probably want to add again, maybe something similar. I think really the next key price action zone is going to be a little bit higher. So you've got to be able to tell where those key price action zones are, if you want things to go a little bit better, because you're going to need to basically space your entries out in hedge mode correctly. And the only way to do that is by taking the high probability entry zones. So I'm going to add a bit more and we'll see what happens now. If this trade is wrong, I'm going to start to look at how I can hedge, because my drawdown is coming over 2% and I really would prefer to keep it as low as possible. So I'm going to see if we can get pulled back to our local MA. We do, almost. So I'm going to kill that for about $400. This is really, really good for a hedge long. Now, I don't want to take anything massive because obviously, we're extremely far up on this scale. And you can see probably just a recovery of the euro and a bit of odd weakness that's taken us this high. I'll just kill that one off for gains there, and I'm just going to add a little bit short just in case we drop, and I'm going to add a little bit more at this high, and then anything beyond that high I'm going to want to swap to my higher time frames just to identify another one of those key price action levels that's going to deliver some probability on our entry. Because if I look at the daily, there's nothing there. Okay, so you've got to be able to particularly if you're going to be swing trading, swap between your time frames just to read where you are in the long term, the near term. And that's basically the point of these of time frames. Really, it's just to organize data in a way that's going to suit your time horizon and what you're looking for. So I'm just scattering these 0.07s as we go. I think actually I'm going to remove that one there. I will add a light short just in case we keep going. I don't want to be left with too many of these longs on as we go. So I'm just going to be careful. I might consider reducing one fairly early. Let's have a look. Okay, so this drop has taken us about 150 to 140, almost 1,000 pips or so. I'll kill that one off. And now really I don't want to get caught with this up here. So I'm going to remove that. I'm going to add a light short. And now I've created a fairly medium position or something a bit more safe. I can take that one off and just start the process of recovering those. Basically making gains to cover what I just lost on removing that hedge, which I've done most of already because I'm taking lots of minor entries and accumulating gains. So take that off and add another one. We definitely paid for our loss there. As you can see, take that one out. And really the profits are going to start to show as the market develops over time. So I'm going to remove those. I'm just going to add two of these, so just under half the previous size of that other short. And now it looks like the market's stalling a bit because you've had all of this, up, down, etc. So I'm happy to take advantage of that. Just take these quick $70 here and there. Okay, it's nice and simple, $80 there. Drop another one in. So these are very, very light sizes I'm dealing with at the moment. Again, most of these videos I like to keep very risk averse so everyone can really understand, that you need to have these tight sizes if you're going to be a good hedger, if you like, and a good trader overall. I would say all good traders just have sensible sizes. That's really the secret. Anything really is manageable so long as you can play it out over as much as you need to. Most strategies need time to show what they're doing. And you can only really stick with that if your sizes are low enough to ensure that, if you're wrong, you're not going to be existentially wrong. Now, if we break this low, I'm going to track the short a little bit. Okay, so I'll let it run, trail it out. I've just got a couple of entries there. I'm just not going to add another short just in case we get to the high. And I'm just going to add another hedge. So you can see the amount of money I'm making on all of these trades, many of them hedges with, your long side 0.07 like that, are going to pay for the losses accumulating here, because obviously I could kill that really with the amount of money I've already made. I'm not going to. I'm actually going to add 1, 2, 3 at the top. And then a break of that is going to allow me to get into damage control mode again. So I can start to hedge this away because my drawdown's picking up a bit. My equity's still in positive, however. Okay. So picking up some drawdown here. But look at the distance we've gone. I mean, we've gone 141 to 152. You know, it's sort of 1100 and whatever pips. Okay. And you're only a tiny amount of drawdown down. Okay. So I'd probably scatter a couple more shorts, but that's as much as I'd be willing to go short at the moment because I don't want to keep adding to this pile. And I want to end up in gains overall. I'm only going to be able to do that if the sizes are not dangerous, because we've gone 1500 pips to the upside now. So at this point, we're getting a bit of a drop. So there, and now I'm going to want to enter some longs just to hedge a bit off. Okay, and then I'm going to enter another light short. I don't want to go heavy on these shorts at all. Okay, going to kill that one off. Add 2 of those longs just to hedge. Take those off. Okay, add 1 light short. And now again, I'm not going to add anything short. Now this is a very, very good example again in this video because we're now 1600 pips off from our former short. So we're a long, long way off, but that's going to give us a good hedge example. And you can see my drawdown. I mean, the balance overall, my equity really is only 3.8% down. And we've gone completely against the shorts that we entered. So it's a good example, you know, no matter, well, even if I'm very wrong at any point, you know, I'm still sitting with minor drawdown and a minor effect. It really isn't dangerous whatsoever. And that's the position you want to be in. You know, if you're finding the market's coming away from you and you just can't deal with that drawdown, then your sizes are very much going to be the wrong amount. Okay, so I've tightened up the short side and the long side. Okay, we're now 0.05, sorry. I would expect you would start to pile down potentially soon because we've come up such a long way for such a long time. Market is really struggling to do anything particularly interesting. I'll play it like this for that reason. Push up to the high, I'll kill that hedge long. And a break to the downside, I'm going to keep that hedge short on. It's going to allow me to block a bit of the loss building on that hedge long. I'll add another hedge long. I'll add another one. And now I can remove this former trade I got wrong. In fact, I'm not going to kill that one. I will kill that one though. Okay, so I'll leave it how it is because I think I had 3 of them there, didn't I? So I'll take that one off. And I'm not going to add anything long unless we've got a key price action level, which we don't. I mean, really, I want it slightly lower, I think. I'm just going to be careful because I probably want to start to look at hedging those longs. Now, if we can get okay, yeah. So I want to add a short there. And if this downtrend continues, okay, it's not at the moment. But if it does, I'm going to kill the former short. So that one, for some reason, this thing doesn't pause quick enough, but I think I got rid of it in time. Take that off. And now you can see we're going back into positive trajectory. So we weathered the storm by this point, really, to be honest. We're out the woods, I would say. And I'm not going to add anything too much just because I've still got that 0.35 there. And I'm going to look at how I can remove it, I think. Because I've got the choice now. Do I want to remove that long or do I want to remove that short? Now, I am going to take that one off because it looks like you're trending to the downside quite strongly. Okay, and now what I can do is I can actually add sort of 3 of these. I can take that one off now. Okay, and if we keep dropping, that's okay. Even though we've taken it off, I can just add again. With the drawdown now, you can see I've solved as a problem. And, we basically, like I said, we weathered the storm, 1,600 points straight against us. Very limited drawdown, very limited worry, very limited panic. And now we can just go forth and just do what we do in most of these videos where you're just accumulating, net gains continually. Okay. So basically, it normally goes like this. I'll either start the video and the markets will be the best they can for hedging, which typically is more sideways movement, or I'll start the video and it won't be sideways. We'll get into drawdown to begin with, and then we'll solve it into profits overall. And that's basically how this goes. It can go either way, but that's the variance of the method. Sometimes you'll start trading a pair, it'll go right against you, but it's fine because you can hedge out of anything and you're invincible now. Or you'll start the video and it will just be gains, gains, gains. And, the market will go more or less your way, more so. Okay, so I can add another couple of longs because now what we're getting is the exact opposite of what we had at the start, which is a complete trickle away from us. So I'm going to add a few more longs there. Okay, now we're getting a pop. Kill that off. Get that off. Now, because we're hitting these early MAs, I'm going to remove that other long, couple of these longs for $12 or so. Take all the gains off there. I'm going to add 2 shorts here. Or was that 3? I hope not. Yeah, it might have been. Anyhow, now we're seeing another drift straight up. So when markets are a lot more erratic, you're going to get more drawdown. But like I said, it doesn't matter. Eventually, they'll settle down and they'll go more, sideways, and you'll be able to take lots and lots of entries and make a lot of profit quite quickly. So there's gains there to be taken, gains there to be taken, and that's going to pay for one of those to be taken off. And I'm going to hedge. I'm just going to take a light long. That one can go. That one can go. Add that. Okay, take that one, add another long. And again, I'm just getting to a point where I can close this all out. And this is another example like the last video where, okay, yes, the gains aren't massive, but what we're really showing you in this video is how, if you're extremely wrong on a drop or extremely wrong on a rally, it doesn't matter. You will always end up in gains no matter how bad the market is going against you anytime. Because that's a question I was asked specifically. I showed a video where we kicked it off and we went straight into massive gains because there was a lot of volatility, but it was in a very tight range. So someone said, okay, well, what if it trended completely against you? And the answer is, you would just work out a bit like I did. And then ultimately and inevitably, the market is going to move back to how it was, where, like I said, you're making the most money in the quickest period. Can now remove that. Okay. And okay, so here we are. We've diminished a lot of the losing positions. We're in net gains overall. We can take a long just to hedge a bit of that short down there. Take another long because we're uptrending quite well. I'll take a third long there. And what I'm going to do at this point is close that. Now we've got no shorts, so a pop-up is going to allow us to close all those longs. It looks like the market is turning over a bit, to be fair. Yeah, there you go. So any push. All right, so I've got a bit there. Take a light hedge. And take that one off. Take that one off. And there you go. I could keep going all day. We're in net gains again. But you can see, just to be clear for everyone watching, 1,730 pips. I mean, straight up to begin with no pullbacks to hedge, 1,550. And then this, you have some pullbacks to hedge, but a lot of the pushes up are very light. So really, if you look at the distance, you've got 2,000 pips or something, you're still in net gains. Okay, so it doesn't matter where you go. You don't have to worry anymore. You're in profit no matter what. If I start playing through now and the market does sit quite sideways and I can just take these very light entries, almost like scalps, I'm now in a position where, if the market keeps doing that, then I can just accumulate gains over and over and over and over again. And instead of the market going straight against me all the time, I'm now in a position where, well, actually, it gives me another $60 there, and I take a short, and perhaps it falls, in line with where we are now. Bang, then take gains there. And you can see what's happening now is the drawdown is nothing, and the gains are piling up and up. And I could go all day and eventually, turn over more and more gains. But the point is, no matter how wrong you are, you will never be wrong enough to blow everything out. And that is what makes you profitable overall. Of course, again, you could put the sizes up. These were very light sizes. You could trade more assets. You could do whatever you want really with it, as long as you're careful. You can see here how what happens is the market rallies right against me, but because I don't need to close them all out as losers, I can then build up, and then the trajectory continues. So you go up, drop with a drastic multi-thousand pip fall, and then back up to the upside. Thanks for watching. See you in the next one.